There is a specific type of person who buys crypto every single day. Not when it pumps, not when it dumps. Every day, same time, same amount. Monday through Sunday, rain or shine, bull market or bear market. They set it, forget it, and 10 years later, they are millionaires while everyone else who tried to time the market is broke. What makes these people different? It is not intelligence, it is not luck, it is psychology. And understanding their brain reveals why they succeed where 99% of investors fail. The anti-anxiety machine, how DCA removes fear. Meir Statman, behavioral finance professor at Santa Clara University, published research in 1995 that changed how we understand investing psychology. He studied why dollar-cost averaging is so popular despite being mathematically inferior to lump sum investing. The data is clear. Investing everything at once beats spreading it out over time 2/3 of the time. Markets trend up, so getting money invested sooner produces better returns. Yet millions of people dollar-cost average anyway. Why? Statman discovered it is not about maximizing returns. It is about minimizing regret. Daily buyers are playing a completely different psychological game than lump sum investors. When you invest $10,000 all at once and the price drops 20%, you feel massive regret. I should have waited. That regret is painful. Your brain obsesses over it. You lose sleep. You check the price constantly. The emotional weight crushes you. But when you invest $100 per day for 100 days and the price drops 20%, you feel zero regret. Why? Because tomorrow you get to buy at the lower price. Your brain reframes the situation. Instead of I lost money, you think I get a better deal tomorrow. That cognitive reframe is powerful. It converts fear into opportunity, anxiety into excitement. The same market crash that destroys lump sum investors energizes daily buyers. A 2020 Vanguard study confirmed this. They tracked investor behavior during the COVID market crash of March 2020. Lump sum investors who went all in before the crash, 78% sold at a loss. Panic dominated. But dollar-cost averaging investors who bought daily through the crash, only 9% sold. They kept buying. Why? Because their psychology was different. They were not fighting fear, they were using the crash to accumulate cheaper. Mental accounting, the frame that protects wealth. Daily crypto buyers use a psychological trick called mental accounting. They separate their crypto buying into a different mental bucket than their regular spending. That $100 per day, it's not spending money, it's not savings, it's crypto money, a separate account in their mind. And once money enters that account, it follows different rules. Research from Richard Thaler at University of Chicago shows that mental accounting protects people from cognitive biases. When you frame crypto buying as a habit instead of an investment decision, you remove the emotional weight. You're not deciding, is today a good day to buy? You just buy because that is what you do every day. It becomes as automatic as brushing your teeth. No analysis, no stress. Just execution. This is why daily buyers don't check the price constantly. They don't care what the price is today. Their mental frame is, I am accumulating for 10 years. Today's price is irrelevant. Only total amount accumulated matters. That mindset is rare. Most people obsess over daily price. Green candle, euphoria. Red candle, depression. Daily buyers, flat emotional state. The price could be up 50% or down 50%. Same behavior. Buy $100. That detachment is what builds wealth. Behavioral economists call this avoiding responsibility. When you set up automatic daily buys, you are no longer responsible for timing decisions. The system is responsible. If the price goes up after you buy, you don't feel smart. If it goes down, you don't feel dumb. You feel nothing because you were not making active decisions. You were following a rule. That emotional neutrality is the secret weapon. The regret reduction framework. Statman's research identified that DCA works because it creates a third outcome frame. Normally, investors see two frames. Frame 1, I made money or I lost money. That's portfolio value. Frame 2, I bought at a good price or I bought at a bad price. That's entry timing. Both frames cause stress. Daily buyers add a third frame. I bought at a better average price than if I tried to time it. Here's how this plays out. Imagine Bitcoin is at $50,000. You have $10,000 to invest. Lump sum investor buys at $50,000, price drops to $30,000. They're down 40%. Frame 1 says, I lost $4,000. Frame 2 says, I bought at a terrible time. Both frames create regret, massive emotional pain. Daily buyer invests $100 per day for 100 days. Some days Bitcoin is at $50,000, some days $40,000, some days $30,000. Their average cost, maybe $38,000. Bitcoin is now at $30,000. They're down 21%, less pain than lump sum. But more importantly, their frame is different. I'm buying cheaper now than my average. I'm winning. That reframe eliminates regret, converts loss into opportunity. This is not delusion. This is strategic framing. The math does not change. They are still down money, but the psychology changes, and psychology determines whether you hold or panic sell. Daily buyers hold because their brain is wired to see opportunity in crashes. Lump sum investors sell because their brain sees only pain. The habit formation loop. Why consistency beats intensity. Daily crypto buyers tap into habit psychology. Research from University College London shows it takes 66 days to form a habit, but once formed, habits run on autopilot. They require almost zero willpower. Daily buying starts as a conscious decision. I will buy $100 of Bitcoin today. By day 66, it is automatic. You do not think about it, you just do it. This is critical for long-term wealth building because willpower is finite. If you rely on willpower to invest, you will fail. Willpower depletes. You have a stressful day, you are tired, you skip buying. Miss one day, miss two, the habit breaks. You stop investing. Opportunity lost. But if buying is a habit, it happens regardless of willpower. Stressed? Buy anyway. Tired? Buy anyway. The habit runs independent of your mental state. James Clear, author of Atomic Habits, explains that consistency beats intensity. Buying $100 every day for 10 years produces more wealth than buying $10,000 once per year. Not because the math is better, because consistency is sustainable. Intensity burns out. You cannot maintain high-effort decisions forever. But low-effort habits, those run for decades, and decades is what builds generational wealth in crypto. Daily buyers also benefit from compound habit formation. Buying crypto daily trains other financial habits. They become conscious of cash flow. They optimize spending to maintain the daily buy. They avoid impulse purchases because that money is for crypto. One habit cascades into multiple positive behaviors. Lump sum investors, one decision, no habit formation, no behavior change, no compound benefits. The emotional flatline. Removing dopamine addiction. Most crypto investors are addicted to volatility, not to crypto, to the dopamine hits from price swings. Green candle, dopamine spike, euphoria. Red candle, dopamine crash, panic. Their brain becomes dependent on that emotional roller coaster, and addiction to volatility destroys wealth, because you make decisions based on emotion, not strategy. Daily buyers break the addiction. By buying at the same time every day, regardless of price, they train their brain that price movements are irrelevant. No euphoria on green days, no panic on red days. Emotional flatline. And that flatline is wealth building because you cannot be manipulated by your emotions if you do not have emotional reactions to price. Neuroscience research from Stanford shows that repeated exposure without consequence desensitizes emotional response. First time you see Bitcoin drop 20%, terror. 10th time, concern. 100th time, indifference. Daily buyers hit 100 exposures fast because they are in the market every single day. They become emotionally numb to volatility. That numbness is an asset, not a weakness. Compare that to someone who checks price 10 times per day but only buys occasionally. They are maximizing emotional exposure while minimizing action. Every price check triggers dopamine circuits, but they are not buying, just watching. That creates FOMO, anxiety, stress. Daily buyers, minimal price checking, maximum action. They are too busy buying to waste time watching charts. Why they win over 10 years. Let me show you the math and the psychology. A 2024 study from Bitcoin Magazine Pro analyzed someone investing just $10 per day into Bitcoin for 5 years. Total invested, $18,250. Value at end, over $90,000. That is 5x return from $10 per day. Not trading, not timing, just daily buying. No genius required, no market timing, just discipline. Every single day for 10 years. That discipline is what 99% of people cannot maintain, but the 1% who can, they build generational wealth. The psychology that enables this is rare. You need low time preference, ability to delay gratification, immunity to social pressure, resistance to dopamine addiction, habit formation capacity, mental accounting discipline, and emotional resilience to volatility. Most people have one of these traits. Daily buyers have all of them. That combination is what separates the wealthy from the broke. If this psychology breakdown made you realize that daily buying is not about better market analysis, but about better brain wiring, smash that like button. This is the mental game that determines who wins in crypto over decades. Subscribe for more content that goes beyond charts to the actual psychological differences between winners and losers. Drop a comment. Do you buy crypto every day, or do you try to time entries? Be honest, can you maintain daily buying for 10 years without skipping? That self-assessment tells you everything. And share this with someone who keeps trying to time the market and losing money. They do not need better analysis. They need to understand that psychology beats strategy, and daily buying is the ultimate psychological